Individuals who are not deemed by law to be citizens of the United States can be classified as non-resident aliens in the following two manners: under the green card test or under the substantial presence test. Under the green card test, an alien that is lawfully admitted to the United States becomes subject to worldwide taxation upon being granted a green card and upon their first day of physical presence within the United States. From that day forward, their worldwide income is subjected to U.S. taxation. Once this status is granted, green card status, resident alien status, this status continues irregardless of the actual amount of time spent in the United States until the green card is either surrendered or revoked. Permanent resident status in the United States can be revoked by the immigration authorities. Example, if you commit a felony while you're a permanent resident, your status will be revoked. You have no right to live in the United States at that point. Or where it's determined by a court of law that you've abandoned your green card, or where a green card holder voluntarily turns back in their green card. Those are the ways you can lose permanent resident status in the United States. The substantial presence test can be met in two manners. The first is the individual is physically present in the United States, by the way, partial days count, on a minimum of 31 days, which need not be consecutive during the year that is being tested for income tax purposes. Second, the alien has spent at least 183 days, again, partial days count, in the United States during the testing period, which is the year we're counting, and the two preceding calendar years based on the following calculation. Okay, the first part of the calculation is the number of days spent in the United States during the testing year, which is normally the year we're looking at. Remember, partial days count in this calculation. The best way to get at this information is to get out your passport and look at the days you arrived and the days you left. So for example, if the testing year were 2015, we would look at all the days spent in the United States in 2015 by looking at the days you entered the United States and the days you left the United States, partial days count, and we would add those up. Then we would look at what happened in 2014 and 2013 to see if we get to that magic 183 day number. But in the testing year 2015, we need at least 31 days before we even need to test the prior 2 years. So in my example of looking at the 2015 tax year, in 2014 we would also look for all days spent in the United States by looking at when you got here and when you left based on your passport, but we would only count those days by 1/3. So add up the number of days in 2014, for example, and take 1/3 of those days for that portion of the calculation. Then we'd look at 2013. We'd look at the number of days spent in the United States, and we would only take 1/6 of the days in 2013 in this example. We would round up to the nearest whole day in 2013 and 2014. Add up the days from 2013, the days from 2014, the days from 2015. If that came up to greater than 183 days, you're considered to have met the substantial presence test and therefore will be treated as a tax resident and taxed on your worldwide income. If you're a dual national, holding a green card or being a citizen of the United States and a citizen of another country, you need to realize that you're subjected to worldwide taxation as a U.S. tax resident, irregardless of that dual status. Dual nationals are subject to U.S. worldwide taxation, even if they're wholly unaware that they're U.S. citizens.